Hi folks, Lee Gettess here with the Market Sense for the week of September 8th, 2015. We will look at some charts that come from the Trade Navigator software that makes my life so much easier. This is a weekly bond market chart, the U.S. Treasury bonds, and you can see big down followed by big up, and now they're starting to just screw around a little bit. Last week was no big deal, and this week is inside of last week, although I should point out this week right here is only one day. We had Monday on Tuesday this week, and that's just one day there. But it doesn't look to me like support and resistance is very important this week. What I mean by that is they're likely to go in either direction. I think if they break down below last week's low, start trading below, say, 53.16, I'd probably go with them, assuming they'll go to 152 or possibly all the way down to the 148 area down here. But just look to go with them and take profits if they run out of momentum at any point. And on the upside, we got kind of a similar situation. There is resistance here around 156.24. And if they break above that, they'll probably head up towards 159. So I'll be willing to go with them if they break above that. If they don't, I don't know. I'm not really interested in selling that resistance. It just doesn't look that strong to me. And I think there'll be a lot of nervousness this week as they try to figure out what the Fed might do next week. Stocks, well, you know what they did a couple weeks ago. We have these huge down weeks, and there is a good chance that this is a significant low. It could be. There's also a good chance they could go test it. Now, of course, again, this week is inside of last week, and last week was inside of the previous week. We're looking at the possibility of going to the 1900 area for support. This 1962 area right here is possibly resistance, but I mean, I think it's sloppy resistance, if I could put it that way. I mean, it's probably 10 points either side of it. I should also point out that if this were a normal market, and there's nothing normal about the S&P, but if this is a normal market, you see this swing low back here, that's up above 2025, and that's kind of where they broke down from. I mean, that's the last swing low they broke down from. A normal market would go back up and test that, even if it was going back down. We've got the upper moving average here in the 2028 area, which coincides with that. So if they rally really, really strongly this week, I'm not saying this isn't a bottom and they won't continue up, but just be very, very cautious, because a strong rally might merely be setting up a good sell for a retest of this low. Just a distinct possibility, that's all. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.